Why are people worried about FX liquidity?
Now, FX is the largest financial market in the world, but it's also probably the most complicated. There's no one central exchange, and trading activity is scattered across dozens of different platforms and venues. Now, on a day-to-day basis, liquidity is fine. Electronic trading has dramatically slashed the cost of trading, and it's increased the speed with which things turn over. But during more stressed market conditions, players like XTX and Citi are saying that liquidity is becoming increasingly fragile, and this is for a number of reasons. It's partly because banks are less able to warehouse risk now. They've also moved to internalize a lot more flow, so the primary markets are significantly less liquid. And this is stacked up to create an environment where, when you get very directional markets, like with the yen carry blow up last year, small trades can end up causing oversized moves.
So, Alice, has this caught the attention of regulators?
So FX isn't as regulated as other asset classes, and that's because it stretches across different time zones and jurisdictions, but it is closely monitored by the central banks in each nation, and they put together a set of best practice principles known as the FX Global Code, and liquidity is part of that set of principles, and lots of them are sort of upping how closely they monitor the market against this backdrop of liquidity challenges. The New York Fed hosted its first conference on FX market structure just a few months ago, and they talked about how the appearance of liquidity in these abrupt pullbacks is becoming more frequent, and they're closely tracking the growing role of non-bank market makers in keeping liquidity flowing. The Bank of England has also warned and been pushing for more transparency in the market for some time.
And so how are asset managers dealing with all of this?
It's certainly a challenge for asset managers, and what's become very clear is that it's still a relationship-driven market, even if lots of things happen electronically. Some of the older trading platforms can struggle to keep up with price updates during volatility, and so lots of asset managers are trying to narrow down their liquidity providers, fine-tune the trading platforms that they're using. And amid all the volatility we've had around Trump's tariff headlines, some have even reverted to voice trading. So old-school voice trading still plays a big role in the market, even though it's largely electronic.